And we'll start 9 a.m. with some breaking news at this moment. In a surprise move, the RBI has cut key interest rates by a quarter of a percentage point. The repo rate has been cut by 25 basis points to 7.75%, while the reverse repo rate has been similarly slashed to 6.75%. Repo rate is the interest rate at which RBI lends to banks, while the reverse repo is the rate at which banks park their funds with the RBI. Now, Reserve Bank of India says that the step has been taken thanks to reducing inflation. It's the first cut in repo since May 2013. There is no change in any either CRR or the bank rate. The cut in repo rate could translate into lower interest rates on loans as well as on bank deposits. We have Ashish Maharishi joining us on the phone line with all the latest. Now, Ashish, if I, as an end user, have a home loan with an interest rate of 10.75%, how does this affect me?
Well, in fact, one has to see, because the banks were also facing a crunch, because of high interest rates. If they pass on this benefit to the customer or not, that needs to be seen. But certainly, it gives them the cushion. Reverse repo means the cost of funds to the banks will go down. Sanket, it very clearly means that, banks will have the cushion to pass on this benefit to the customers. So obviously your EMI will come down if the bank chooses, and it is entirely the prerogative of the bank to pass on the benefit, if they want to the customer or not. But certainly it gives them the cushion, and it's a good news for after a very, very long time, because we have seen the banks raising the interest rate for the reason because RBI had been had been increasing the interest rate for the reason because the inflation was very high. After a very, very long time, we've seen that the inflation has been flat. So in fact, the wholesale price index came down to 0.0%, and yesterday's figure was 0.11%. Similarly, in the consumer price index, inflation goes, that has also been not on a high path. So certainly it gives them the opportunity after a very, very long time. The demand has been, of reducing the key rates for a very long time. But Reserve Bank of India had said that, they wanted to see whether the inflation figures are going to are at a sustainable level or not. But certainly it's a good news for customers, and let's see if the banks pass on this benefit to the customers or not.
Well, will they is the main question, Ashish, because what really, if you could explain for the benefit of our viewers, what really is the precedent in this particular case?
Well, if you see, the precedent has been that the banks have been passing on the customer to the customers earlier as well. Ultimately it is the bank. The market is open. There is competition. Obviously, we'll see, and we have always seen lenders like State Bank of India and ICICI in the private sector making the first move, and then simultaneously we see other banks coming down, reducing their own interest rates. But let's see, it has certainly given them whether they're going to pass on the benefit or not, we still need to see. But certainly there is an opportunity for banks because we've seen, home loans, there have been hardly any takers of home loans and car loans. The market has been sluggish for quite some time, though, the government tried to use the excise duty and pass on the benefit to the customers. But ultimately, it is the interest rate which the customers look at. And you must have seen, Sanket, schemes in the market where people, the builders have been started offering one flat with free with another flat. It is for the reason because their stuff is not selling in the market. So the real thing is that once the interest rate comes down, obviously your EMIs go down. It becomes more affordable. You can buy a house. Housing is known as engine of growth as well. So it certainly gives them an opportunity, the bankers. But let's see if State Bank of India and ICICI Bank makes the first move or not, because that has been the trend. Both these banks, either the PSU banks or the private sector banks, these are the two banks which make the first move. Okay. Let's see if they pass on the cushion or to the customers.
Now, Ashish, very briefly for the market illiterate like me, what really does CRR, repo rate, as well as the bank rate actually mean?
Well, in fact, bank rate, the repo rate and reverse repo rate are inversely proportional to each other. It means that once the repo rate is reduced, reverse repo is also reduced simultaneously. To give an example, 0.25%, if it has been reduced, it means that, the cost of funds will come down. It is the rate at which the banks, the Reserve Bank of India lends it to the banks, and then there is another rate which is the reverse repo at the rate at which the banks borrow it from the Reserve Bank of India. So it clearly means, the cost of funds will come down for the bankers. So this gives an opportunity, whereas, cash reserve ratio means the ratio at which you have to park your funds with the Reserve Bank of India as safety. So here it is that, once the cash reserve ratio comes down, it means more liquidity into the market. That we have to see because, only the repo rate has been reduced. So obviously the cost of funds have come down, but liquidity concerns still remains the same.
All right, Ashish Maharshi there getting us all the latest. So on the upside is that if the banks decide to pass on this benefit which has been given to them by the Reserve Bank of India, then in that case it could be good news for you who is aspiring to have a home loan or a car loan or any other borrowing from the bank.